Ladies and gentlemen, boys and girls, we are back, and I want to discuss Palantir. So, if you guys have been following it in the growth counter, if you're in my mentorship, then you know we've been in this. It's been the number one ticker. We're up quite a bit from it as well, and so we own 100 shares. Now, what we previously just did was we'd bought shares. We at an average of 18. We had sold a call. We let it go at $23 because I thought we might pull back. But because we based out, we bought 100 shares and instantly sold a call against it. Let me pull up the last post real quick because I'm going to show you guys on Robinhood. I want to talk about rolling and show you guys how it's done. I have the growth account in the Robinhood account. It's just a quick tutorial for anybody following along with options. They don't understand the terminology of rolling. So let's bring up Palantir. Okay, so we actually bought 100 shares at 25.06. So it's down right now, but we literally just crossed into the red right now. Even though it is red for everyone else, for everyone that sold options contracts against, we literally just crossed into the red. Earlier today, with this stock down, the options contract was down, and we were actually still up. Remember, we sold to open, so when it goes down, those calls we sell go value-wise go up. We're profiting at that point. So what I first want to do is make the decision, I guess, is what one do we want to sell? We sold the 25, where are we at? 2550s? Yeah. We sold the 2550s expiring today as of me recording this, February 16th. So I want to roll it to next Friday. Essentially what rolling is I'm going to buy this one back to close, and then I'm going to sell next week's to open. Rolling just does that all in one transaction. So we first need to pick what price, what strike do we want to do. And then I'll pull up TOS here. So we're already on Palantir. Okay, so we want to do February 23rd. That's next week's expiration. I like selling weeklies. People love to say, like, let's just take this for instance. The 2550s for next week, $41. If we go 2 weeks out, the 2550s are now $77. And people love to chase that because they think they're collecting more. And they are. But what I like to do is sell weeklies. I would rather sell two of these than one. I'd rather sell 2 1 weeks than 1 2 week, Plus, I get the ability to move my strike and stay in and make the decision. Do I want to let the shares go? Do I want to hold on to them? How do I want to do it? And just kind of keep my deltas at about the same. A very popular strategy. Now we're looking at the delta column right here. So my head is just not covering it. So look at the deltas right here. The options contracts will expire at 1 or 0. That is your only options. They are racing to that, so the closer it gets to the end, you see them start to really bounce back and forth as they wither away. That is your theta column right over here. That is your time value. And when you go 2 weeks out, all you're doing is giving it more time value. But that's still like a coin. There's heads and tails. More time to be right, more time to be wrong. And a very popular strategy, again, getting back to the deltas right here, is to sell the 30 deltas because this is a percentage chance of, not only is it how many shares you control, but a percentage chance of it expiring in the money. So if we go to this 27 deltas right here, the person who buys that from me has a 27% chance of being right. I have a 73% chance of just keeping all that guy's money, and we try it again next week. And that's likely what I'll end up doing is the 26s. But I want to take this, because I look at this and I look at technical analysis. And if we are pulling back, if we're going to stay range bound or pull back, what I don't want to get into is a top scenario. Remember, I bought these at 25.06. Now I collected $30 already on the 2550 call. So you can take, it's 30 cents per share. So you can take $30 right off that total amount, 30 cents right off the shares. So technically I own it a little bit less. And if I sell the 2550s again, it did bring it down even further. I could even, if I thought it was going to even pull back, I could sell the 25s. Oh, you know what? And I got to be honest, guys, you're seeing me make the decision real time. This is looking a little bit archy. We're running into that momentum, that slowdown. So I was the 26s. Now, what I don't want to do is get in the same scenario where we were last week, where I sold the 23s and had to let them go, and then it pushed up again. So we were already back into it. Granted, we've made money everywhere. I don't get caught up in I sold at 23, I have to buy lower. Like once that trade's locked in, it's locked in. Whether it's 1 second ago or 1 year ago, it doesn't matter. Getting hung up on that number, like I see a bunch of other people do, is Just stupid. Doesn't mean anything. It's about where the stock's at and where do you think it's going. Now, I think Palantir is going to go much higher, but that's speaking for the year. Now, what do I think about next week? Do I think it's going to be going down or up? We can use things like the RSI, like maybe we're headed south. We're still a little overbought, so maybe that might lead me to think we're even weekly overbought. So what I'm going to do here is I'm actually going to move this strike down. Now I'm already, again, I bought the shares at 25.06, less 30 cents per share. So just because I don't even want to mess the math up and get made fun of, 25.06 minus 30 cents. So I own these shares at 24.76. So remember, when I sell this call, if it goes above that and we let these shares go, if we let that contract get exercised, then our shares get called away, and we're essentially picking the price at which we would sell our shares for. So right now, if I pick the 25 strike, I'm going to collect $61. So that's 61 cents per share. So that would bring it down. That would bring my average cost down to, closer to 24. So we can just do minus 0.6. Let's go right at the bid, 0.62. So we would own our shares, and by we I mean I would own the shares at 24.14. And essentially I'd be selling them at 25 if it were to push above it. Now, if it expires at $24.99 or below, I still have all my shares. I have this guy's $62 plus the other guy's $30 that I just collected, yesterday actually. So, however you want to look at this, I own the shares at 25.06 and I sell them at 25 plus the magic internet money that appeared in my account, which I'm calling the options premium. Or do I want to say I own it at 24.14 and I sold it at 25? Either way, it's just money into a bucket, whatever that bucket's labeled. Some people will keep an Excel document. I am, just to keep track of my average cost and everything in here. So what I think I'm going to do is I could roll flat out right now and collect $45 for next week. Because we're a little overbought, let's check out the overall market. Let's just do one. Let's just see we're just a little bit up across the board. I don't want to take that as a warning shot, especially if we're in the 2021 market again. Things are just pushing up and nonstop. Tell you what, here's what I'm going to do. I'm going to sell the 25s. I'm going to roll it down a strike to the 25s. I'm going to collect now $63. And then if it ends up pushing above, I'll have to make a video next week about rolling up and out, or just not letting them go again. And we'll see. So you might get a part 2 to this. So what I'm going to do now is pull up my phone. We'll pull up again. So I'm on Robinhood. So if you clicked on this for the tutorial, you'll see the Robinhood position. Okay, so what you can see here is, so we bought the 100 shares right at 25.06. You can see the value right now, 24.74. So total return right now, minus, it just changed to $32.49 as its current blinking all over the place price right now. Now, the option strategy right below is the call contract. You see right there, February 16th, 25.50. It's worth $1 now. 1 penny per share times 100 shares. That's why I'm saying $1. Now, I'm up 96.67% on this play. Again, I collected $30 from it. And right now, total, we're up $29. So, effectively, we are minus, $3, $4 on this play. So what we're going to do is we're going to click trade. Hang on. This is just clicking on Palantir in general. We're going to come down here and click on the actual options contract. And there's the chart for that. You can just see the value just gone down, which is what we expect it to do. We want it to expire worthless. When you're an options seller, you want it to expire worthless. When you're an options buyer, he's hating this right now. He bought the 25.50 from me thinking this thing's going to go to the moon. Clearly is not subscribed. So we're going to click trade down here at the bottom. We're going to click roll position. Now, again, all this is going to do, you can see right here, current position, the 25.50 for February 16th, buy to close. And then we're going to select the new position because, again, we're buying to close, selling a new one, and we're just doing it all in one transaction. You can manually do this. You can just buy this back to close, and then you can sell this new one in 2 separate transactions. It doesn't actually change anything, just kind of does it a little convenient. So we'll click on, what did we just click on? Select a new position. All right, we're going to select February 23rd up top, and I'm going to make the decision to sell the 25. So all we're going to do is just click on that right there, and then we're going to click roll. And then, so you see here's the position. Here's your 2 contracts. Your net credit is going to be $62. You're going to add 7 days to this thing. And what we're going to do is sell this contract for $63 minus the one that we're going to buy back to close. And that's going to be our net $62. So remember, we are gaining $62. Someone is paying us. The money's being transferred here. When you buy, you send that money out. So this money's going to come right into our account right now. So we're going to switch that over. I go right at the bid because I just like it to happen. It says the bid 62, the ask 64. We're just going to keep it right there and call it good. I go at the bid because I just want it to fill. So we're going to click review. We're going to swipe up. So here we go. There, quantity filled. I have to screenshot that because I have to post it. Done. And that's the new position. So now we have a new contract in the account. So we just collected $62. Now you can actually use that $62. You can go buy, at this point, you can buy 2 free shares right now. And this is a very popular thing that I do with some other positions is I'll take that premium, buy more shares, and that's how it snowballs. Because if you have 100, right now you'd have 102. Eventually, it seems like it takes a while, but it adds up. And eventually you have 200 shares. Now you're collecting 2 contracts. And it snowballs into much bigger positions. So when you hear me talk about things that I don't sell those shares, I just hoard them, that's what I'm doing. If there is a position where it does shoot up, I do have to buy those back to close. But a lot of times I'm actually selling over here in the teens. 15, give or take a couple on the deltas, 85% chance that I'm right. And I do win a lot. Just with those odds, it's kind of hard not to lose. But like a slot machine, occasionally they pay out the jackpot. But in this case, I bought my shares at 25.06. The 15 deltas, if you wanted to play it safe, is 27. I don't actually lose in this scenario. I collect the guy's money week over week. Eventually, one day, it just shoots up, right? It takes off. Now, I don't sell things on earnings, which is why we had our shares go from 18 to 23 in the first place. We didn't have a contract sold until after the move up, and then we got a hold of the little gamblers that said, who wants some? They got some. They were right. But we still made money from 18 to 23. So even though we let it go, we were outside, 2 standard deviations? After an earnings play, they got the continuation. I had my shares at 18. I sold them at 23. Plus, I kept the premium. So it's all the win-win. If I sold the 15 deltas right now, I would sell my shares at 27 plus keep his $15. So it's not a matter of did you lose. It's just maybe you made a little less. But all we're going to do is take that premium. We're going to switch over here to the put side. If we were to let them go, and we'll sell the 20. Right now, we'd sell the 25s. So then we'll sell the 25 puts. We'll get right back in at 25. We'll collect $87. So anyway, I want to do a quick tutorial on how to just roll that position. Do whatever you want with the money. Again, if I'm posting all of this just to show how I would manage these trades and how I would do things. They're not call-outs, so you do whatever you want. If you agree, then I bet we have similar numbers, and you're up over 30% on the year already. So that's sweet. Last year was 100%. So far this year, we're up 30, and it's just past Valentine's Day. Not bad. Not bad. How's that SPY position looking? Don't worry. In a decade, it'll be up on average 10% a year. You're doing pretty good. Anyway, I'm going to wrap it up here, guys. Let me know if you want more tutorial videos and all that. Just, do all the things, the likes, the comments, the subscribes. The sharing, it really helps out. But let me know any questions. What other tutorials do you want? And I'll post them up there for you. Have a good one.